All right. So, what's up, everybody? I'm going to do this webinar here on how to avoid getting screwed in your 401k again by your financial advisor. So, this should be fun. I've done several videos like these for you guys, but I kind of want to put it into like an official one. So, it's one that I kind of want to condense. I might do a little bit of rants, but I'll try to cut down my rants and just kind of give you the goods right off the bat. So, I want to start making this now because now, obviously, I'm making this video during the time of the the coronavirus, and, the market's tanked. Everybody's wondering what's going to happen. Is the market going to go back up? Is it going to drop? Yada, yada. But already most of you guys, or not most of you, but I'm sure some of you have lost, in your 401k, right? And wondering what's going to happen, what's going to work out moving forward. How do I avoid that again? Is the market going to go back up again? Is Trump going to prop it up? All of that good stuff, right? So the answers to what's Trump going to do and that stuff, I really don't know. But it's a very pivotal time to take a look at the markets because you want to be prepared for if the markets, so they say, right, the market drops and crashes and big drops, and your financial advisor, I'm sure, probably says to you, don't worry, right? The market will go back up again, right? It's like deja vu all over again, right? And I say that because deja vu all over again, right? We could all go back to the charts. Fool me once. What's that saying? Fool me once, shame on me. Fool me twice. Or is it fool me? What is that saying? Fool me once, shame on you. Fool me twice, shame on me. I don't know the saying, but all I know is deja vu, right? So my analogies suck. But I guess you could say deja vu all over again. 1, 2, 3 strikes, you're out at the old ball game, right? This is not the first time this has happened, these major corrections, right? Back in 2000, it was the dot-com bubble. And back in 2008, it was the financial crisis. We could have never seen that coming, right? Jeez. I'm sure the banks and the financial advisors and the hedge funds surely never thought something was wrong with the financial system, right? They would never know that. And I'm sure if they knew that, they would never make sure, they would always protect their clients, right? They would never allow them to just, purposely drop like that. Heck no, they would never allow that, right? And then, going into an election year, you magically get the coronavirus that completely tanks the stock market, right? Going into an election with stock markets at all-time highs. Very coincidental. So let's say all these things are coincidental. Let's say nobody knew the dot-com bubble was going to happen. Nobody knew the financial crisis was going to happen. And nobody knew the coronavirus is going to crash the stock market, right? It's all coincidental. Kind of weird though, right? Because there are people, there was some rumblings that there were some Congress people and political people that were making money on the way down here on both sides of the aisle, right? Not just on one side, Democrats and Republican. I'm sure that's all coincidental, of course. Like they would never just, purposely make money when the stock market drops like that, right? So, guys, I'm sure this is probably your first time. I'm sure it didn't happen during the financial crisis. I'm sure it didn't happen during the dot-com bubble. I'm sure it's just always just magical, coincidental. Obviously, you can see I'm being sarcastic. The reason why I'm being sarcastic is, let's call it like it is, guys. There are people behind the scenes that make money, that know things before they happen, before you and I know it. Now, I'm saying this not to be doom and gloom because I'm going to give you hope, because stock charts, you'll hear me say this over and over and over again. The reason why we preach this so much and teach this so much is that if you learn the charts, you can learn the game. You can learn the game. You can defeat the game by learning the charts. Because anytime I try to say this, somebody that's worth $10 compared to somebody that's worth 10 billion or 10 trillion, I don't think there's anybody that's worth 10 trillion. I sure the heck would hope not, right? Because we've never been told that, but who knows? Maybe there are some people out there that are worth trillions, right? Anytime some billionaires or maybe even some trillionaires or millionaires, they buy and sell stuff, right? They leave that clue on the chart. right? That clue on the chart is there for you and I to decipher and manage and determine our risk management strategies, not only in trading, but also in managing our 401ks. Now you could say to yourself, well, hey, listen, I don't manage my own 401k. I give it to my advisor. And this is where now we're going to start. Let's talk about this, right? The first thing I like to tell people is right off the bat, number one, if you've taken this 30% hit over the past month or two, ask yourself, why did your financial advisor allow that to happen to you? Right? You're paying them, right? I don't know how all their fees work. I'm sure different places all have different strokes for different folks, right? But I'm sure they make money, right? They make money when you're invested in the stock market, right? Not sure. Some of them may make more money if you're in risky funds compared to safe funds. That's stuff you have to ask. Ask the right questions, right? I have a sales background. They always used to say, ask open-ended questions or ask closed-ended questions, but ask the right questions, right? Go to your advisor, and this is a great test. like to tell people this. Go to your financial advisor and ask your financial advisor as soon as possible if you've been burned by them or you've lost a lot of money, or you feel like something's not right. Ask them if they know how to read a stock chart. Even if you like your financial advisor and they do right by you, ask them. This is always a good question. Do you know how to read a stock chart? And then listen to their responses, right? If they're like, oh, you don't need to know stock charts and blah, 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 blah. If they ever kind of poo-poo it, I like to use the word poo-poo, but if they ever like push back saying stock charts don't work, you better find a new advisor because stock charts absolutely do work, right? They're not foolproof, but they help you to be able to manage your risk when buying and selling stocks and with managing your own 401k. And I bring this up to you because even if you have a financial advisor, you need to be able to, unless they're right on and they avoid, let's put it this way. If your financial advisor proactively calls you or reaches out to you when the market's at tops and say, hey, Mr. or Mrs., whatever your name is, the market's super overextended. I'm a little bit worried for your 401k. So do you mind if we put you in some safe, secure funds for a little bit until things blow over? If they don't do that and you start losing money, that's a problem, right? So I say that to you because it's not very common, guys. I'm not saying they don't do it, but I'll tell you what, a lot of the major brokers, ones like, I won't go down this path again, but some of the major brokers that you might have a 401k with on your own or an IRA, let's say 401k, IRA, 401k through your employer, they might have it through a big company. So they might have it with a TD Ameritrade or a Fidelity or something like that, right? And a lot of times through an employer, right, you'll put your money in and then it's through TD or Fidelity and they manage your funds. I say, quote unquote, manage them, right? I say that because a lot of those big brokers, I would bet money that they don't call you proactively and move your funds to super safe funds when markets are at tops. If they do, the next thing I would say to you is ask your financial advisor, whoever's managing your 401k, will they ever allow you to go cash for a period of time? You could say cash. I've never even heard of doing something like that. Kind of weird, right? Think about it, right? You had this whole, big run up with Trump and getting into the office. Markets at all-time highs, right? You have the highest stock market you ever had. Lots of money the past few years. Wouldn't it make sense just in general that the market would even want to correct or pull back even some, maybe a lot, right? So what if your best interest, not your brokers, not your financial advisors, what if your best interest for a period of time until the market pulled back, you went cash, right? Would that potentially be in your best interest? Right? You might give up some profits, but just kind of like look at this chart here when we teach this. I would never in a million years ever tell somebody I liked or even disliked. If I didn't like you, I still wouldn't tell you to buy a stock way out there because I couldn't sleep at night. Like I wouldn't want to be vindictive. I would never buy a stock when markets are at all-time highs like this, ever, right? But many people have their entire wealth in their IRA or 401k in risky funds when markets are at all-time highs. That's why you can think many times like sectors like pot stocks or, high moving sectors, you'd be like, why did, marijuana got legalized in these states? Why did all these pot stocks dump? Because it's buy the rumor, sell the news, buy low, sell high, right? So this candle right here, this crazy shooting star candle, that was great news going to the new year. The great news was stock markets at all-time highs. The economy is great. Everything is booming, right? That's great news. Now, not going to blame that on Corona. I'm sure nobody saw that coming, of course. That's sheer coincidence, and I'm sure never the market would drop. That's just sheer coincidence. I'm sure nobody, right? Billionaires, millionaires, trillionaires, if there are any, I'm sure none of them would ever short the market down on people. Like, surely banks and hedge funds and really rich people, they would never allow their clients to be in risky funds up here and then take short positions on the way down. They would never do something, especially after 2008. All those clients, they surely got hurt really badly. They would never do anything to hurt them like that again. No, of course not, right? Why do I say this, guys? I say this not because I think financial advisors are bad. I think most advisors are good. But I think that the people that they report to many of times maybe aren't so good, or maybe they have better interest or their own selfish interests per se at heart, right? So they might still factor in, right? You're doing your algorithms for your retirement. You want $1 million or $2 million, whatever it is when you're retired. They factor you out from the age of 20 something years old when you're a young little whippersnapper until you're 65, and they factor in 3 or 4 recessions and whatever. And they magically give you this algorithmic formula to put in there, and you magically poof, get your $1 million or close to it when you retire. So they factor in all these things, right? Many of them, I'm sure, are coincidental, and who knows? There's other things like wars and other things that, just come out of nowhere, or coronaviruses that come out of nowhere. These things that just are unforeseen, right? They're somehow just magically factored in, and many times you get your money and it's good to go, right? But what if you wanted $1 million at retirement, but what if you knew stock charts and you could manage your own IRA or 401k, and you could read a chart and you realized, hey, I'm going to avoid these 2000s, these 2008s, and these 2020s coronaviruses, or shall I say potentially avoid, right? Again, you can never completely avoid them. But what if you were able to avoid the huge drops and not have to take those 20 and 30% hits every 7 to 10 years, and you can manage your risk at tops of markets, let the market correct, and you don't take the hit. And I say that, you could say, well, how the heck would that ever happen, right? How could I ever do that? Because I don't manage my own money. I don't know mutual funds. I don't know how to manage my 401k. Well, there's actually something very simple that you could do, right? This is where, again, you have to have the right financial advisor, one that does what you want them to do, right? Number 2, and this is going to be the biggest test, right? 2 really important things. Number 1, you ask your financial advisor if they can read a stock chart. That's test number 1, right? Test number 2 is going to be this one. Ask your financial advisor if they will ever allow you, if they will ever allow you to go cash in your IRA or 401k, and wait for the response. You can say, what do you mean? Why would they never want that? Why wouldn't they want that, right? Think about it. If they make money when you're invested in the market, if there's a period of time when you're not invested in the market, what does that mean for them? Right? Somebody actually made an analogy, and it actually made a lot of sense to me. It was like, that would be like me, right? I'm a trading company, right? So we have memberships. We have membership fees in our trading company. That would be like, hey guys, why don't you guys kind of quit your membership for several months? Just take a pause for a little bit, come back later, right? Kind of think about it, right? And we're in a business, right? Hey, please, don't buy from it. It's like we're a business, right? They want you invested. So I don't fault them, but what I do not like is the car salesman approach afterwards. When that market tanks, right? They say, oh, geez, we never saw it coming. Don't worry, though, little one, pat you on the butt and say, hey, here you go. It's going to go back up again. Market will go back up. The problem is, like I try to tell people, when will the market go back up? This was, the peaks up over in April of 2000. It took all the way back to basically in 2007, right? 2007, whatever this was, 2008, right? 2007. All the people lost their money over here in 2000 took them all the way up to 2007 or whatever this. I always get confused by the charts. 2006, 7, right? What's that? 6, 7 years. Here we are again, right? Market tanks. When will we go back up here again, right? That's the magical question. Is it going to be before the election? Is it going to be after the election? Is it going to be years? What if Trump gets reelected? What if he doesn't? Right? Do you guys think, I talk to people, just this common, just think logically, right? There are people that hate Donald Trump that want money in their 401k. There are people that hate Donald Trump that were happy they had all their money in their 401k. Now they've lost that money. Now what do? Do they want Trump to bring it back up, or do they want somebody else to get in office? If somebody else gets into office, will they magically bring it back up again? Right? What are their policies? Do those policies support the stock market? Will it bring it back up again? Right? Stimulus checks, right? I'm sure there are people that hate Donald Trump that want a stimulus check, right? There's these things to think about, right? It's not so cut and dry. Again, I'm not making a case for Donald Trump or not for Donald Trump. I'm saying just think about these things, right? Very important things to think about. So I ramble and now I'm losing my place. Cash, right? So ask your financial advisor if there's ever a time you can go into cash, right? I would bet many of them are going to really be upset by that answer or give you some weird excuse or say you would never want to do that. And I think it's very simple, guys. If you really put logic together, it's because when you're not invested in their market, into the market, they're not making money. So it's kind of weird, right? It's kind of interesting how, think about that dynamic in that relationship. Really take that in, right? That's kind of the dilemma, right? It's either one of two scenarios. Financial advisors they either do know, rephrase that. They either don't, right? They either don't know how to read a stock chart and they manage your portfolio and they use algorithms and they get, however they factor it all in and suddenly you get your money when you retire. So either they don't know stock charts and they allow you to take these drops, or they do know and they allow you to take these drops. I would argue, obviously, them knowing and them allowing you to take those drops are definitely worse than not knowing. But these are people that manage your wealth, right? Think about how much more money you'd have at retirement if you avoided drops from the coronavirus, 2008 financial crisis, and 2000. You can say, well, that's great. I don't understand. I don't even know what I'm looking at on your screen. On my screen are candlesticks. Candlesticks form by the battle of the bulls and the bears. Anytime, like I said, that somebody buys and sells a stock, no matter how rich you are, it leaves the clues on the charts, and this is where it helps you to manage your risk. Now, I'm not going to go in depth on this. Again, if you want to learn candlesticks and trading and all that, we have courses on our website. You can go to our website at bullishbears.com or click the link below. This is not going to be about that. I'm going to give you something very tangible to keep an eye on and to track along the way to help prepare you. Because think about things, guys. There are some things going on right now. I hear things like Trump is in control of the Fed or the Treasury. He may be printing us back out. You keep hearing things like the Fed's going to keep buying stocks and those things. So that's where you could say, well, that's fake money. That's quantitative easing. You can get mad and upset and all of that and screw Trump and blah, 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 blah. And I would say, okay, that's fine. But that's all been happening since way before Trump. Pretty much this. What you see since 2008 has been a lot of, it's the foundation of sand. It's quantitative easing, right? Propping the markets up. So Trump didn't create that. Trump's just adding on top of it. right? So I like to say that Trump's done some good things, put some good foundations down, but he's putting concrete foundation on a foundation of sand. At some point, this needs to happen. You can say, oh, the market needs. So people say, what are you talking about, man? You don't want, like I'm right now, I'm at the point where like, for the sake of everybody, I don't even care. Print us out, get us back to all-time highs again, get people feeling good. You could say, why would you want that? That's fake, blah, 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 blah. It's for the sake of a lot of people right now. The world's pretty crazy right now. And the foundation it's already sand. If you put the sand up here, it's sand on top of concrete, on top of sand. Things need to correct. You can say, well, when's it going to correct? How are they going to do that? I don't know, guys. All I know I've heard that is that there's potential rumblings that there might be corrections or might be changes in the future, that if Trump gets reelected, he might do things to change the system. I don't know that. That's just rumors, things I've read, things, people lie all the time about things. There's rumors that maybe he'll do something to the Federal Reserve or the system, possibly a second term. I don't know. He maybe will. Rand Paul, I know, has talked about auditing the Fed, stuff like that. I don't think the Fed's ever been audited. Ask yourself, who owns the Fed? Is it the federal government? Is it private families? Do your research, right? Very important stuff. So I'm giving you some things to research about. The Federal Reserve, when they sneeze in either direction or cough, no pun intended, when they sneeze or cough or whatever they decide to do, it affects the entire stock market, which affects your entire 401k. Who are the people that do these and make these decisions? Important things to know, because again, the banking system, guys, right? It's the entire banking system. Learn about it, because many of the advisors, they all kind of roll up kind of indirectly to a bank, and then there's a whole process on the way up, right? So I say that to you because you have to start to understand these things of, number one, get an advisor that knows a stock chart. Number two, ask if you can ever be in cash. Number three, start learning stock charts for yourself, because eventually when you start going through the process, if you don't find a good advisor or you get kind of frustrated, you can kind of start to manage this stuff yourself over time once you learn charts. You don't even need to necessarily do mutual funds. You can buy and sell stocks. You can buy and sell ETFs. You could just trade SPY. You could ride SPY up for, long periods of time, and then, buy shares of the SPY, or buy an inverse, buy, shares or ETFs in gold. It's not that hard to do it. You just got to spend some time to learn, right? Now, if you don't want to learn and you want to just kind of gauge along the way of something you can look at, I want to bring your attention to this, right? You're going to see this peak up here. There's two peaks, right? There's all-time highs of 339.08, and then this is for tracking the SPY, which tracks the overall market. Then there's this 332 area. You're starting to see we might be getting some buyers coming in, and potentially, we'll see, maybe this is going to move and reverse and go back up. Maybe, guys, think about Trump, right? Whether you like or dislike Trump, there's lots of things about Trump. I saw a Netflix documentary one time about Trump. I don't know if it's still on there. It was like a 4-part series with Trump and how they kind of painted him out to be, well, not kind of, they did, right? That he's an egomaniac. He's never going to lose. He's always going to admit he's right and win, say he's won even if he's lost, all that stuff. So like whatever, egomaniac, whatever you want to call that terminology, right? But think about something. This is not whether you like or hate Trump. Think about that. If someone will do anything it takes to succeed at all costs, so let's say that's true with Trump, and he's going into an election year, and you hear he's kind of in control of the Fed and the Treasury, and they're going to keep buying stocks, is it actually that hard to think that Trump might prop the market back up, at least to the election? To me, again, liking or disliking Trump, that would make kind of sense. A higher stock market going into the election would help him to get reelected more than a lower stock market. Do I know if he's going to be able to do that? I don't know. I'm going to watch the charts, right? So what I'm trying to prepare you for is, this is something to start looking at. He might be starting to creep us back up, right? You're seeing down here, right here, there was kind of a down channel right here, or not a kind of, definitely a down channel, right? Corona happened, stock market tanks. If you guys look over here, there's a potential reversal. I say potential because we got to watch this like a hawk. Down, now it's starting to move back up again. Potential up channel. Now, this could also be what they call a bear flag. You have to watch this channel here. If price starts to fail this channel, it could easily fall back down, right, and fail. But remember, if Trump keeps buying stuff, if he's not going to let it fall, and today I'm listening here, he's already talking about plans to reopen the country. If you really listen, they're really not, if you really pay attention, he's not actually saying anything. It's kind of like or dislike it. He's talking about reopening a country when it's actually not reopening. It's actually good optics. Like him or dislike him, you're putting positive attitude, vibes, whatever the heck you want to call it, into the market. So where people say, how the heck can the stock market go up when the country's still closed? Well, if he keeps talking about opening the country again and he keeps buying stuff up, who knows? He may, I'm going to watch the charts, V-bottom this up, and he may bring it to all-time highs again. Maybe before the election. I don't know. I'm just trying to prepare you guys, right? I want to prepare you guys so that if he brings the market back up to all-time highs again, here's what you can do to prepare or manage or protect your 401k or IRA. When price starts getting up to these areas again, you see this all-time high, I'm going to circle this, 339.08 on the SPY. This line pretty much over here, that's all-time highs. When markets are at all-time highs, this is where you could talk to your advisor. Hey, stock market's at all-time highs. I'd like to go safest funds possible or even cash. At all-time highs, this would have never, if you were cash in your IRA or 401k, if the market went up more at all-time highs, sure, you would have given up more profits. But guess what you would have never had happen to you if you were in cash? You would have never lost this. It's as simple as that. If you were in cash, you wouldn't lose money like this. You can say hindsight's 2020, you've never known it. Well, if you learned stock charts, you could have prepared. There was some warnings. There was, several warnings here, So as the market starts going back up again, pay attention to all-time highs and also this level right here, this line kind of right in here. Because if you start seeing these consolidation candles either below this line or right at this line, and it starts to fail, then you have a head, left shoulder, right shoulder, possible head and shoulders, and it could fail again. So who knows? I don't know what Trump's going to do or what he can or can't do. He might bring it up. And even if he got it up here, if he brought the markets back up here again by election time, people would feel a heck of a lot better. If they lost 30%, and let's say this is 25% gained back, now you're only down, let's say 5% for the year rather than 30. People are going to breathe a lot more, right? Now, what if Trump brings it back? Trump, right? If he's quote unquote a showman, he's going to not lose and whatever. Who knows? Maybe he brings it and he breaks it just above all-time highs. Who the heck knows? I don't know. He may do it. And what if he brings it up above all-time highs? If he does, these two lines are very important. I personally would feel safest going if I am, let's say you're still in aggressive funds, you took the hit and you're going back up here again. I personally would never go risky or aggressive again in my IRA or 401k until price broke above this line and held. It held support like this. These are support areas and it's riding. If you start seeing these consolidation candles and they're starting to fail this line or this line right in these two areas, that's where if you get your money back, if you dropped down here and you get back nearer to here, I can't tell you what to do. I'm not saying to do this. I'm saying you have to learn this stuff, but ask the right questions. Ask your advisor if they can read charts. Ask if you have the ability to go cash. If you can't, these are questions to ask your advisor now. You want to ask them now so it can help you to prepare for if we start going up in these levels over the next few months, because if that will give you a chance. If your advisor can't do charts or read charts, if they won't move you to cash, it gives you a chance to find a new one that will, so you can be prepared and protected, right? So again, I really want to draw your attention. Take this stuff in. It's very important. I say this stuff because it's a big game out there, guys, in the industry. I told you a lot in this video that you just got to do your own research, things I can't really go into much, but understand the system. What's in it for them? What's in it for your advisor? I'm sure many of them are very nice people, but if they can't read a stock chart, that's terrible. That's just terrible, right? Trading is not gambling. Trading's only gambling if you don't know what you're doing, right? So I want to show you guys this. Take the time to learn this. Again, we have courses that'll teach you how to read candlesticks like this. If you don't have a brokerage account or something like that, you can go to sites like, I'll give you some free resources you can go to. Stockcharts.com. So if you're like, I don't really want to learn from bullish bears, whatever, go to stockcharts.com. You can type in the SPY and just, you can track it. See, it's a little bit different, but you can play around with this and kind of update it yourself, right? So it's similar to what I just showed. You can just track it at stockcharts.com for free. Type in SPY. And watch these candles. And as candles get to all-time highs and, right, these levels right here, if you start seeing those consolidation near this, right, near towards the election, I'm not saying to go safe. I'm saying ask the right question. Ask the question if you feel comfortable, if it makes sense to you. Then maybe you do that and wait. At least me personally, I want to see price hold above all-time highs. You can say, why is that? Why is that so important? Why are you like really drumming it? Why are you making such a big deal? Right? Because of this. Do you guys see when I just showed you that chart over here? Let me go back to here. You guys see, let's say this out in the future. You see how this is like a top and that's a top, right? Kind of two peaks, right? Two peaks up there. Well, what happened last time, a couple times, there was that same pattern, right? You guys can see here, here's a peak and here's a peak. That's called a double top. When this top can't break this top, that's a double top failure, right? But so that's on longer time frames. But also happens, guys. It happens on shorter time frames. These are monthly candlesticks. You have, 1, 2, 3, 4, 5, 6. That's a 7-8 month period of time, right? All-time highs, comes right back down, kind of comes back up. These peaks can't break that peak. So what is it? It's a double top failure. Failed. Then kind of does, here we are in 2007 or 8 right here. And what is this? Top and a top. This tops. This is what I want to bring your attention to. You see how this green candle kind of faked out this candle right here? That's a fake out. I really want you to pay attention to this. I just have this feeling we're going to get that. Again, just a feeling, not saying I'm right, but I get a hunch that so look, here's another 6 to 7 months, right? This peak didn't hold that peak. What did it do? It didn't hold, it didn't break resistance and hold. That's resistance. It went above and it failed. Just like back over in here, right? This peak right here went out to the future. This second peak didn't break that peak. What happened 6 or 7 years later? Touched the peak right here, right back down. This touched the peak from 6 years earlier, failed, went up, broke above it, and then it failed again, right back down. Double top failure. Flash forward. Now, all the people from the financial crisis right here in these areas, people that were in a peak way over back right here, going into 2007 or 8, was all these people that had their money at tops over here, they had to wait all the way over here in 2013, right? 2012. Several years. I'm hoping, guys, you better hoping listen, if you hate Donald Trump and you love your 401k, you better hope he does it a heck of a lot quicker. So you can get back up and running again, get back that money. And you can say, well, that's the normal part. Again, it is normal for the stock market. But why is it normal? Is it normal for the stock market to do this stuff because it's normal? Or other things, right? Either it's unexpected or there are people that expect this and you or I don't. That's the magical question, right? So I bring that to your attention because coming forward, what do you see over here? Potential, either head and shoulders if we get up here, or double top. What I want to see, guys, is a firm hold, grasp. I want to see a nice hammer that holds. Boom, something like this, or something solid like this, or something solid like this. What I don't want to see is this. You see that little, it pokes up right above there and then fails? That's what you want to be very careful of. So if Donald Trump brings things back up to this area near election, just to summarize, number one, make sure you are prepared. Now is the time to prepare. Again, I don't know what I'm saying this, and as I say this, the market might just tank. It may fall. Who the heck knows? None of us know what's going on behind the scenes, right? Trump could be saying good things to prepare us because he knows it's going to tank all the way down here again. I don't know. I'm just saying be prepared, because the bears, what better way, the people that hate Donald Trump and the bears that want this market to tank, there's no better FU to those people that hate Trump and the bears than to print the way out of here and bring it all the way back up. People will lose their dang minds. They will lose their minds. The bears will freak out. People that hate Trump will lose their minds if he does it. He's bringing fake money into the stock market, quantitative easing, blah, 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 blah. And meanwhile, they've been doing it since 2008, and Trump was not in office since 2008. The entire system is made of that stuff, guys. Eventually, hopefully it'll, maybe they'll recorrect it, maybe they'll change it, maybe they won't. But just be prepared. I wanted to make this kind of video of something you can do. Again, ask the right questions to your financial advisor. Be prepared. So that you can be ready for if we get to these levels again. You'll at least have somebody. Guys, I don't care, yes, we are a membership-based service. I don't care. I really don't care if you ever join us or buy anything from us. I don't care if you don't, any of it. It's hard for me to sleep at night with this stuff because I know this stuff, and it breaks my heart because I was trying to tell people, I made videos all back in here trying to warn people, and it happened, Now I'm trying to put my pride aside and say, yeah, I was right, but now I don't want to be right anymore. I want this to go back up here again because at least people can have a shot. If they're going to allow you to get screwed, the system's going to allow you to take these drops, then screw it. You know what? Print this way back here. At least some of you, whoever is listening, some people might be able to get some of it back and protect themselves and start learning a skill set that they can protect their wealth moving forward and not allow these things. Because guys, yeah, okay, great. You get the money back, but you tell me, are you going to sleep better at night or worse at night if you lose 30% of your retirement in the course of a month? If any of you tell me that you're going to feel better and you're going to sleep better, you're going to be happier losing 30% of your retirement in a month or two, then I want to know what kind of drugs you're taking, because I mean, most people aren't. They're not feeling good about this. There's some potential hope here. It could easily be dashed if it tanks right back down. But it can also, guys, this can come back down right here again, and he can double bottom it back up, right? It may not V-bottom. It may come down and double bottom, and then he props it up. Or it might just tank. Guys, there's no saying that this is going to keep going up. I mean, remember, our country's still shut down. This could easily fail resistance way up here and tank back down. This could easily smack down and fail. We got to watch. But I just want you guys to be prepared and know what you can do moving forward. So again, I'll say it, repetition's the key. Number one, take this chart to your advisor, or don't even have to go to my chart. You could just go to Like I said, go to stockcharts.com, type in SPY, S-P-Y, and ask your advisor if they can explain this. If they can't, then you have a skill set that I just taught you in this video that, just some of the basics that you'll know more than potentially your own financial advisor. I'll guarantee you, if you call up a TD or a TD rep or a Fidelity rep or someone like that on their phone, I bet you a lot of those reps couldn't even explain this chart to you. That's terrifying. Why do I know that? Again, I'll be nice. Happened to me from personal experience, right? I don't even want to go there. I've already ranted about that enough. All right, so let me take a look at some of your comments or questions here going forward. I'm actually, you know what? I'm going to stop this recording. So for people that are watching this on replay on YouTube, I'll try to keep this shorter because I rant a lot, but hopefully this helped you. Again, go to stockcharts.com, track the SPY, get prepared, talk to your financial advisor, make sure they can read stock charts, and also make sure and ask them, hey, are you cool if I ever go cash for periods of time to protect myself until I see support levels hold? And then when they hold, then I'll go risky again. If they won't, find a new advisor. And if you want to learn a skill set and learn these charts, again, we'll teach you this in our community. The link will be below, or you can head to our website, bullishbears.com. So hopefully this video helped you, and we'll see you in our community. Enjoy.